I want to start with something that spans two of your careers here, politics on the one hand and now banking on the other, and that's the U.S. China trade dispute. We have these negotiations going on even as we speak right now. What effect has this dispute had as a practical matter on the Chinese economy and on the U.S. economy?
Well, having just been in China, I can tell you I did hear from a lot of investors and decision makers there that certainly there is some reaction and consequence to the stand that we're taking in the U.S. against China. And obviously the slowdown in that country has been well reported. But I would say take a look, David, at what the impact really is here. Obviously, our economy is much less dependent on exports to China. And I can tell you from the standpoint of Moelis Company, what we're seeing is in the M&A market, there's still elements in place here that despite the volatility, despite the uncertainty in the trade agreement, that there's still a very robust outlook in terms of deal making. And, we started the year in this country, I think, slower than we had expected as we were on the heels of a rate increase last year by the Federal Reserve. And the second half of the year, we're looking at a much more positive environment, obviously with still the uncertainty around the trade agreement, regulatory outlook, but really for M&A, what we're seeing is with low rates persisting, that's obviously access to capital is helping the thought process around M&A. And we're also seeing, frankly, the role of technology and all that's playing to try and spur along deal making.
Well, it's interesting because we hear from Jay Powell, the chairman of the Fed, that there's a lot of uncertainty among the business community, which is actually having some dampening effect on the economy. You're saying you're not seeing CEOs hesitate to pull the trigger because they're not sure what's going to go on with trade?
I think it depends on which sector and the size of company and whether they're multinational or not. Because, yes, the multinational companies that we're seeing will certainly take a step back while this trade negotiation continues. And there's been some hesitancy, I think, as a result of the uncertainty around that. But I do think that when you look at the components that we as an investment bank look at in terms of M&A, I talked about technology fueling M&A. In the mid-market sector that we're very active in, we still see some strong signs that would lean towards more M&A. You take a family business, for example, that otherwise may have looked at selling every 30 to 40 years. Well, now with the entree of private equity and the sponsor community, they have a much more rapid timetable where advisors like us will say, hey, look, there is obviously an appetite to transact and for more deals. So again, you couple that with the need for management and boards to take a look at technology. Is their company well positioned? All those kind of things tend to increase interest in deal making while we're still under this sort of macro uncertainty on the China trade issue, the global growth, and those kinds of things.